Ladies and gentlemen, good day and welcome to Balaji Amines Limited Q4 and FY25 earnings conference call hosted by Elara Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amok Deshpande. Thank you, and over to you, Mr. Deshpande.
Yes, thank you. A very warm welcome to everyone to discuss Balaji Amines Q4 FY25 results. It is our pleasure to be able to bring to you the management of Balaji Amines Limited, led by Mr. D. Ram Reddy, who is the Managing Director. I would now hand over the conference to the Balaji Amines management for their opening remarks, which shall be followed by a question and answer session. Over to you, sir.
Thank you, Mr. Deshpande. Good evening, everyone, and thank you for joining us today for Balaji Amines earnings call for the fourth quarter and the financial year ended 2025. We appreciate your continued support and interest in our company. I hope everyone had an opportunity to go through the financial results and investor presentation. Today, I will walk you through our financial performance, key business highlights, and our strategic initiatives we are undertaking as we continue to focus on long-term value creation. Let me begin with an overview of the industry landscape. We continue to navigate a mixed demand environment. The pharmaceutical sector has shown stable demand, which has supported our base volumes. However, the agrochemical segment remained volatile during the quarter, with only a marginal year-on-year increase in demand. On the pricing front, we are witnessing continued pressure across key product lines. Turning to our business performance, I am pleased to share that this year we made significant strides in expanding our capacity and enhancing our product portfolio. We successfully commenced operations at three important facilities: the methylamine plant, the N-butylamine plant at Unit 4, and the rooftop solar panels installed across our units. In line with our ESG commitments, the first phase of our solar power plant with a capacity of 8 MW DC was commissioned in April 2025. This initiative is already helping us reduce power costs across all plants substantially, which is a positive step toward lowering our carbon footprint. On the product side, we enhanced our existing dimethyl carbonate plant with new equipment for producing electronic DMC, which was commissioned successfully in May 2025. We also expect to commission the propylene glycol pharma grade plant in the coming quarter of this financial year 2026. The construction of our dimethyl ether plant is progressing well, with commissioning planned during this financial year. Similarly, the N-methyl marketing plant at Unit 4 is under active execution. Most equipment has been ordered and field works are underway, with commissioning expected in the financial year 25-26. We also reconfigured our existing methylamine plant at Unit 1 to manufacture isopropylamine, which will have a capacity of around 20 to 21 tons per day. We anticipate commissioning this facility once we receive the necessary pollution control permissions. Additionally, we are undertaking a capacity expansion for our acetonitrile plant at Unit 3 in Chincholi, scaling up to 60 metric tons per day. This is expected to be commissioned in the financial year 2026 and 27. Looking ahead, we plan to set up a new plant for the manufacture of NBPT with a capacity of 2,500 tons per annum. This project is expected to commence in the next financial year. Importantly, all these projects are being funded through internal accruals, highlighting our strong financial position and cash flow generation capabilities. I would also like to update you on the expansion activities of our subsidiary, Balaji Specialty Chemicals Limited. We are executing a greenfield project worth approximately rupees 750 crores, focused on manufacturing a range of specialty chemicals, including hydrogen cyanide, sodium cyanide in various forms, and EDTA products, benzyl cyanide, phenylacetic acid, and triethyl orthoformates and trimethyl orthoformates. This project is progressing well and is expected to be commissioned by the end of financial year 25-26. Additionally, a brownfield expansion for EDA-based products at Unit 1 is on track for commissioning in financial year 26-27. With these strategic initiatives underway, let me now take you through the financial highlights for the fourth quarter and the full year ended March 31st, 2025. During Q4 financial 25, we witnessed an improvement in our business performance compared to the earlier quarter of the financial year. This was largely supported by relatively favorable global macroeconomic conditions and a gradual uptick in volumes. As this trend continues, we anticipate a corresponding improvement in both EBITDA and PAT margins in line with the broader recovery seen across the chemical and specialty intermediates industry. Let me now walk you through the consolidated and standalone financials for the quarter. Revenue from operations for Q4 FY25 stood at 361 crores compared to 321 crores in Q3 FY25. Total volumes were 25,871 metric tons in Q4, up from 24,107 metric tons in Q3 FY25. EBITDA for Q4 FY25 came in at 68 crores compared to 54 crores in Q3 FY25 with an improved EBITDA margin of 19% versus 17%. Profit after tax stood at 40 crores for the quarter compared to 31 crores in Q3 FY25. The segment-wise volumes for Q4 FY25, amines volume stood 8,360 metric tons. Amines derivatives volume stood at 8,389 metric tons, and specialty chemical volume stood at 9,167 metric tons. On a standalone basis, we continue to remain a zero-debt company. Revenue from operations stood at 327 crores for Q4 FY25 compared to 305 crores in Q3 FY25. EBITDA was 64 crores compared to 57 crores in the previous quarter, with EBITDA margins improving to 20% from 19%. PAT for Q4 FY25 was 40 crores, up from 36 crores in Q3 FY25. Now coming to the full year performance for financial year 2025. On a consolidated basis, revenue from operations for FY 2025 was 1,430 crores compared to 1,671 crores in FY 2024. EBITDA stood at 265 crores compared to 353 crores, with an EBITDA margin of 19% versus 21% last year. PAT stood at 159 crores compared to 232 crores in FY 2024. On standalone basis, revenue from operations stood at 1,296 crores compared to 1,359 crores in FY 2024. EBITDA came in at 249 crores from 265 crores, with an EBITDA margin at 19%, and PAT for the year was 156 crores compared to 171 crores in the previous year. While the year was marked by challenges across input costs, pricing pressure, and global uncertainties, we believe the steps we have taken on capacity expansion, cost efficiency, and portfolio diversification have laid a strong foundation for recovery and growth. With that, I conclude my remarks. I now open the floor for questions and answers.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Ahmed Mada with Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Firstly, trying to understand the timelines of all projects and the product expansion. Please correct me if I'm wrong. Is it fair to assume the DME and all the other derivatives such as MIPA, DIPA, NMM, NBPT all will commercialize by FY27 end? Is it fair to assume that way?
See, I'll give you all this. Like dimethyl ether, it will be commissioned in this financial year, 25-26 only. N-methyl morpholine also by end of 25-26. Isopropylamine, actually plant is ready, will be commissioned. We are waiting for the MPCV clearances, consent to operate. Maybe we get in a week's time. We'll be expecting to commercially commission by this week.
Okay. And acetonitrile, you said FY27, is it?
Yeah. Yes.
And in terms of acetonitrile, you were supposed to change the technology for the existing capacity as well. Is that done? How is that progressing?
See, we are the upgradation and the expansion is together in the existing plant modifications, which will be commissioned by 2027 with the new technology only.
Okay. And so far existing, in current last FY25 financial year, our volumes for acetonitrile were close to negligible, or there was
very negligible. You are right, very negligible.
Okay, got it. Now just trying to understand the demand side for DME and other derivatives. Have we started doing the validation batches and conversation with customer? If you could give us some sense of how that is progressing.
Yeah, actually plant is getting ready. This being a first time manufacturing and being a gas farm. So we are waiting for the certain approvals from the PESO point of view. The moment we get that approval, probably we'll start the plant and we'll start distributing the samples and all these things will take place.
This is for the standalone. Now, the subsidiary side, you said the 750 crore greenfield capex will be completed in FY26 itself. If you could give some sense, what will be the...
It is in the two phases, my dear. The first phase will be about 350 to 400 crores and the rest will be in the second phase. In first phase, we will be doing hydrogen cyanide, sodium cyanide, that is solution and 100%, and also EDTA derivative. These are the products we are going to make in first phase, and rest other products will come in the second phase.
And second phase will be done by FY27 or later?
Yeah, after FY27. Yes. Once we commission all these plants, then we'll take up those plants.
Okay. Makes sense. Now, for this product, what are the key application segments we are targeting? And also, because this is cyanide chemistry, not many people are doing it. If you could give some sense how we have been able to build this technology through partnership, our own R&D. If you can give some sense so that we understand and appreciate your technology and process little bit.
You are right. You are right. This sodium cyanide is technology very closely guarded, which is having with only few people. And we have taken some basic know-how from the outside country, and which has been Indianized and detailing engineering and designing of the equipment is done by the in-house. And the consumption of these products majorly into pharmaceutical industry and as well as agrochemical also.
Okay. Will it be possible for you to share who the technology partner is?
I think it's difficult to share right now. Probably once we commission all the things, I'll definitely like to share.
Yeah. Last question from my side. If you look at last one financial year, FY25, and we look at a standalone business, I'm just keeping the subsidiary aside for timing. We had top line contraction as well as margin contraction. While if I look for a close competitor, there was in the standalone business, there was growth as well as margin improvement. I understand the product mix are different and there will be slightly different trends, but will it be, if you could explain what explains the divergence and also how you are seeing the pricing and volume trends in the base business for FY26?
Yeah. See, normally, as you rightly said, the product mix is different to the company to company. And in one financial year, one company's products which may do the better and other companies' products may not have done better. That is the reason why how it is happened. And coming to the current financial year, we have seen April, May we have seen very positive. Even in the price point of view also we have seen. But just recently, last 1.5 weeks, we are seeing little pressure on the pricing because of the raw material prices. All these things became little uncertain worldwide because of the war conditions. Because majority of the petrochemical products, right or wrong, indirectly it comes impacts from the Iran impact. So probably we will have to wait for the proper stability. Then we will understand how it will go for the next 1 or 2 quarters. But demand is there. Only thing is prices are going up because of this war.
Got it. And if we keep pricing aside for timing, for this year you have visibility of what percentage volume growth, if you can give some range?
We are expecting minimum 10 to 12% of the volume growth.
Okay, got it. Fine, I have a few more questions. I'll come back in the queue. Thank you so much.
Thank you. Next question comes from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yes, sir. So my first question is regarding DME. Sir, when we last spoke in November 24 Concall, so you had said it will be commissioned by end of this year or maximum Q1 FY25-26. And right now you're not committing a date. So could you please guide us by when it will be commissioned?
Thank you, Raju. See, plant is ready. Everything is ready. We are waiting for the peso. Some of these, peso means I'll tell you, since it is the first time the product, it will start right from the creating the code of the product for applying for the peso license. That is number one, which is completed. Then we will have to apply for the storage tank, bulk storage tank at our end. Second, bulk storage tank for the customer, and also we need to have the guidelines in place. And thirdly, road tankers permission. Fourth, cylinders permission. This is partly done. I think some of the cylinders permission we have received. Now we are waiting for the road tank permission. And since we are talking about the blending in the LPG, so we were requesting the government that you should give the permission on the existing LPG tankers only. We should be in a position to utilize, because since the VAS is already notified that there is a 20% of the DME can be mixed safely, blended into LPG. So we are waiting for all these things. The moment we get it, it's a matter of days to commence.
Okay, and what kind of capacity utilization you expect this year?
It's very difficult to say. The moment we get the permission, if the acceptance comes from the customer end, we may go minimum 50 to 60% capacity.
Okay. Sir, my next question is on BSE Unit 1. Now, sir, when we last spoke in November 24, you had guided that the bottlenecking will be complete in 4 to 6 months. And now in your presentation, you have talked about brownfield project, which will be commissioned in FY26-27. So there is a little confusion on my side. Is it the same or it's different?
Yeah. I'll tell you, see what we have done, the existing plant that the bottlenecking partly is done, because all these modifications and the brownfield what we have to do is on the running plant only. So we will have to do 15 days we are running and 15 days we are doing some of the works. And we are expecting in the next 6 to 7 months we should finish everything. By year end, paper side we have given the financial year first quarter of the next financial, we should be in a position to come in full-fledged for the total brownfield, whatever we are saying today.
So, sir, what I know is the products for which we had clearance was EDA, piperazine, data, and AEP. Any other products besides these?
Yes. That is TETA, triethylene triamine, which is also again TETA, TEPA. And in existing PIP data also, we will get the increased quantities from the existing quantities.
Okay. And so my next question is, currently a stake in BSE is 55%.
Yeah.
Is it possible for the company to increase the stake to, let's say, 75-80%?
It's very difficult to say at this moment because it is related to the decisions of the board of directors meeting. So, see, once you commission the first phase of the unit 2 of the subsidiary, then probably there will be some parts to discuss on those.
Okay. And also on BSE Unit 2, when we spoke in November 24, you said in 11 months it will be commissioned. And now you have told about end of FY25-26. So is there a delay of 4-5 months?
No, only 2-3 months delay because of this rains and all. Already erection is on the way. Some of the things erected and some of the big equipment on the way to come. Probably you will see if you come next month end, that is July and August, you will see a lot of equipment in the place. And we are taking all the equipment erection and the commissioning, then trials, because being a first time product and being a cyanide based product, we are taking precautions and longer term we are telling you. Probably end of this financial year, we may be in a position to commission and commercialize at least 1 or 2 plants.
Okay. My next question was on this DMC, electronic gate DMC. Have we tied up with the battery makers? Any update on that?
We have given one ISO tank to one customer and some part quantity to one customer of electronic gates. So they also given some trial order, some 50-60 tons trial order they have given. So we just started. The last 2 weeks back only, I think 1 week back only, they have given one ISO tank material to one of the battery chemical manufacturer.
So by when can we expect this plant to be commissioned fully?
This all depends on their commissioning, Rajiv. We are waiting. In fact, even for the battery people also they started taking. See, along with this EMC, there are other chemicals which will go. That also we got one trial, one ISO tank which we have already given. That is NMP. We have given the battery grade material to one of the battery manufacturers. So we see, as we are doing, we have done trials. They also go for their trials in their production. Once they come in their commercial, then we will be getting up our full swing supplies.
Thank you. Mr. Rupani, please rejoin the queue for more questions. Next question comes from the line of Anil Shah with Insightful Investments. Please go ahead.
Yeah, hi, sir. Good afternoon.
Yeah, good afternoon.
Am I audible? Yeah.
Yes, sir. Very good.
Yeah. Okay. So just wanted to know what exactly will be the spending on capital expenditure over each of the next 2 years in standalone and separately in a subsidiary, sir.
See, standalone, as of now, we have only not more than 2 to 250 crores, whatever the products we have identified. And as far as the subsidiary concerned, it is from total is about 750 crores. First phase around 3 to 350 crores, and second phase 350 to 400 crores.
So first phase is 350 crores, the second phase will be 400 crores in the subsidiary.
Yes.
And in standalone, we will be doing 250 crores.
150 to 200 crores. It's partly already done. Right, like Zenmetal, Marcolin, and this solar, those are all partly completed. Only one product, full project is pending. There may be about 70-80 crores. And these part of these expenses are pending. All put together, not more than 200 crores.
More than 200 crores in standalone.
Yes.
Correct? So this is this is actual capital expenditure spent. This is not capitalization of CWIP, which are already there. Am I correct?
Yes. Yeah.
So my question to you is, how will, on a consolidated basis, given that the subsidiary is, looking for a pretty large capital expenditure over the next 2 years, on a consolidated basis, if we assume the business to be continuing the way it has over the last 2 or 3 years, how will the balance sheet look at the end of March 27?
See,
in terms of net cash, debt.
I'll tell you. Last 2-3 years, I think last 1 year, this subsidiary was not doing well on account of some import competition because of the product mix. Since we are doing that brownfield, some modifications we are doing. This financial year end, we will see some 1 month we will get this actual result of this investment. Yes, next year, both unit 1, that existing unit, definitely will do about 2 to 300 crores minimum in the unit 1. And in unit 2, the expansion unit also may do another 3 to 400 crores top line.
You're talking about subsidiary in FY27?
Yes.
So, is there a chance that by March 27 annual report, we will be a net debt company on a consolidated basis?
Net debt?
Yeah.
Yeah, probably we see, if it is a first phase, we may not see much of the debt required, maybe 150 crores we may require in the subsidiary level. But as far as the standalone concerned,
yeah.
Tell me.
No, right now we are net cash. We are
net
300 crores plus net cash.
Yes. See, what happened today we have the surplus in both standalone as well as the subsidiary. This year we will be consuming both cash, whatever surplus. In addition, we may consume the working capital basing on the DP available, basing on the stocks and DP available, whatever working capital. After that, if anything required at the end of the finishing these 2 expansions, we may go 50 crores or 100 crores hardly for the debt by 27. This is, I'm just approximately I'm telling you.
So, just continuing with this question, if I look at last 2 years, we've spent almost about 440 crores on fixed assets, on, basically on capital expenditure. Part of it could be maintenance and part is expansion. Out of this 440 crores, the increase in CWIP is just about 100 crores, 120 crores. Okay, out of the 400 crores. 280 crores has already been capitalized, which tells me that the plant is up and running. But we don't see that kind of growth in revenue and EBITDA and profitability.
See, Mr. Shah, what happens anytime you go for any expansion, first financial you will not see the any turnover immediately to 80%, 100%. And here, we are talking about all the products first time in the country. As far as the solar is concerned, it is already started generating the revenue from the April onwards. And the NEPA, which is going to start this month, and DME, which we invested about 150 to 200 crores on that single plant, which will be commissioned, because just when I was answering to the other question, we are waiting for the phase of approval. The moment we get the approval, then immediately we may get 50% of the plant utilization come in the year. So next year, definitely you will see these results.
I understand, sir, but despite 440 crores of capex spent, our top line is down 40% over 2 years.
That's what I am telling you here. The plant yet to start. The money spent, but we are waiting for the permission. The moment we get the permission, we will start the revenues.
So that number that you are talking about in terms of plant yet to start should show in CWIP, which is just about 200 crores. 2 years back, that number 10 crores. The increase in CWIP is only 120 crores. We have spent 440 crores, which means that the rest of the 320 crores has been capitalized, which means production is on.
See, one plant is already started, that is one Balaji. Now we are talking about the NBPT, which is in continuation of that product, which we have yet to build that plant. The moment we build that plant, this bitumen plant will run 100% capacity, which is not running today, right? On the second one, dimethyl ether, which I am telling will start running this year. And third, we are spending, partly we have spent some money on account of advance to the equipment for the astronitrile. That will also be commenced by year end. So all these things we cannot expect immediately. It will take time. We have done only the DMC capacities, which we are waiting for the battery manufacturers how to start. And dimethyl ether, which I said, we are waiting for the PESO permission. Butalamin, we are running. The part we have to commission the other plant. So these are all have to commission. You can say they're part of the thing. The moment you produce 100 kgs of material, you are supposed to capitalize the amount. There's the reason you will say that you already capitalized, you did not run. So it will take time.
Thank you. Mr. Shah, please rejoin the queue for more questions. A reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Aditi Loharuka with CD Equisearch Private Limited. Please go ahead.
Good afternoon, sir. Sir, could you please share the initiatives which you are taking to scale up the volumes of DME in current year and next year?
DME, the total plant capacity is about 100,000 tons. And this year we are talking about 50,000 tons. If we go for the 50% capacity utilization, it will be around 50,000 tons. And next year probably we will do 70%, means about 70,000 tons volume.
Okay. And could you please tell that how much revenue will the additional capacity generate?
It's very difficult to say right now, Aditi. The moment we start, that depends upon the prices. Probably it will be 70 to 75 rupees per kg. Approximately, I am telling you, depends upon the raw material prices at the time of commissioning.
Could you please repeat the number? I didn't get you.
This is about around 70 rupees per kg.
Okay. And so just one query that why has the commissioning of Asian plant been shifted to next year?
Because we have other plants in place. Asian is already there are 2-3 manufacturers are there. And we wanted to make sure that the new technology should work. We have done some R&D on that. Now we are sure that the new technology and new equipment we have designed, which is ordered. So the reason we have taken time.
Okay, so will it be commissioned in H1 of FY27? Should we believe this?
Yes, by end of the current financial year to start of the next financial year.
Okay, and what kind of margins can we expect from ACN?
It's very difficult in this volatility market. paying for a year, it is very difficult. But as I said earlier, even now also I am optimum on the EBITDA around 19 to 20%.
Okay, sir. Thank you.
Welcome.
Thank you. Next question comes from the line of Aman Madhurecha with Augmenta Asset Managers LLP. Please go ahead.
Hi, sir. Thanks for the opportunity. So, sir, could you please highlight, how is the marketplace specifically across all the products, let's say like a DMHCl, DME, N-butylamine, and all the new products that are coming up? Similarly, what is the demand and how much is the import? And can there be a situation wherein we could face a situation like a DMF scenario wherein we are not able to utilize the plant because of dumping from other countries? Could you please highlight on all this product across?
Yes.
How is the marketplace?
Yeah. So as regards the DMF, we just started improving our capacity utilization. This year you will see there will be improvement because we are trying to run the full capacity. And as regards all other products, there was a very positive. The April and May, we have seen across all the products across the world, there was a good demand. And even pricing also there was an improvement. Only thing is now last one and a half week, we are facing some problem in the raw material prices increases because of this war situation between Israel and Iran. So until otherwise the stability comes around the world, it's very difficult to say where we stand. But what I can guarantee that there are few products which goes in the essentials, like life-saving drugs and all, like as you said, dimethylamine hydrochloride. Those are running full capacity. There is no problem because it is consumables like a medicine, human consumption. Those are running well. Only thing is we are getting some pressure on the pricing.
So that looking at a point, for example, because of this, the tensions escalating between Iran and Israel, we are expecting that the methanol prices could shoot up drastically, right, and would impact the profitability.
It is already increased. Last 1 week they have increased about 7 to 8 rupees, but it has to stay stable. Somebody will take over this supply instead of Iran. Either Saudi or Qatar or Oman, those people will jump in and the prices will stable somewhere. Today they are talking about 30-31 rupees. According to us, it should stable somewhere 27 to 28. As against we are expecting from 23 to 24 rupees.
And also, sir, for example, our one of the bigger expansions is coming in dimethyl ether, the 1 lakh ton of capacity. So, how is the marketplace domestically? Obviously, it's a 20% blending with the LPG, etc. But currently, is the country importing DME from someone, or is the first time that DME is used with LPG?
Actually, this is what we said is an alternate for the LPG. The country is presently importing more than 30%, 25 to 30% of the LPG from the outside country. So that's the reason the BAS has given its notification saying that you can blend 20% of DME into LPG. So we are working with the government of India to get a notification to the all oil companies to blend this. That is number one. Number two, we have an opportunity to all aerosol consumers, wherever the pressure requirements for the aerosol manufacturing. We expect that we will replace entire aerosol market the moment we get the PESO permission. And thirdly, there is a commercial. If we don't succeed immediately for the blending in the LPG, but there is a commercial requirement like commercial hotel industry and industrial use where the LPG used for the heating. So there our product will be definitely viable, and we don't need any permissions or anything. We can directly go ahead. Only thing is we are waiting for the permissions of PESO. that is Chief Control of Explosives permission. The moment we get that, nothing will stop us going into the market. We don't need to wait for the blending into the LPG.
And also, sir, if you could highlight on how is the EDA doing, ethylene diamine, because we have been seeing that the subsidiary numbers are deteriorating, the margins are taking a hit. So what is happening on the EDA side of the things, if you could throw some light?
You are right question. See, there was a lot of dumping from the China. Then we approached the government for the anti-dumping, which is in the process. The investigation is going on. And in the meantime, the prices have been improved little. That's the reason we started the plant. Plant is running presently at 40-50%, which was closed for some time because of the dumping and competition from the China. And we are doing the certain modifications also to minimize the EDA, ethylene diamine, and increase the other products portfolio capacity.
Understood, sir. So we are currently operating the EDA plant at 40 to 50% utilization, right?
Yes, you are right.
And lastly, sir, could you throw some light, currently, if we are not generating any revenue from acetonitrile, we are generating maybe marginal money, let's say, from a DMF.
Yes.
So what are the key products wherein we are generating the money, be it the derivative side, be it the specialty chemical side, where are we actually generating good amount of money and the product is also viable?
Yes, I think I have given in the annual results press release, as well as in my speech. I have mentioned clearly what are the quantities, like amines are there, methylamine, both together, and the derivatives are there, like NMP, dimethylamine hydrochloride, DMAC, DMF partly, and DMAC. There are many products are there. So like that, and specialty chemicals fund, like NMP is there, Marpolin is there. So these are all contributing. No, only other than ACN, all the plants are running. Only ACN we stopped because of the modifications and because of the price situation, because of the new upgradation, new technology. We are not producing presently anything with the acetonitrile plant, but all our plants are running.
Understood, sir. Thank you for the opportunity.
You are welcome.
Thank you. Next question comes from the line of Deep Chitalia with 9 Rays Equisearch. Please go ahead.
Am I audible?
Yeah, very well. Go ahead.
Sir, my first question is the performance of our subsidiaries seem to be more impacted in FY25. So could you provide some reasons for this poor performance of our subsidiaries?
The same thing I was telling Mr. Chitalia, what has happened because of there are two reasons. Number one reason is because of the dumping from China, competition from China. We were not in a position to run full capacity. Number two, we have taken up some modifications in the plant, which is a brownfield, which will complete by end of this financial year, where we will be reducing these low-cost products. We will be consuming this low-cost product and producing the high-value products like PIP, Data, TAPA, all these products. So with these, by end of this financial year or first quarter of the next year, we will see the results of these modifications, and we will see the actual full the maximum level of running capacity of this subsidiary. And also in the coming financial year, we will see the expansion. First phase, some of the plants will be operating for the next financial year. So both put together, you will see the good numbers at the top level in the next financial year.
Understood, sir. Sir, in the incentives which we are supposed to receive for the 750 crores mega project from the state government, so how it will get reflected in our numbers?
That will be whatever the incentive sanctioned will be paid in over a period of 7 years' time. That depends upon whatever the GST paid, 50% GST paid on the sale you are supposed to claim, and the government is going to reimburse that, which we are getting some amount is already for the Balaji Amines, as well as in subsidiary also. We are already getting some cash in the current financial year.
Okay, sir. That's all from my side. All the best for the future.
Thank you. Thank you. Thank you, dear.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yes, sir. My question was on DMF. So last we spoke, you had told us you will apply for some anti-dumping duty on DMF. And now that our methyl amines plant is commissioned, so what kind of capacity utilization will we see in this year? And what are the current prices of DMF?
We started running at full capacity when it makes loss also, because right or wrong, with our government, we have to prove ourselves by making the losses. At least 1-2 financial years, we have to make the losses. Then you are eligible for the filing the anti-dumping. So there is one file is already pending that EDA investigation is going on. After that, if we make the losses, as of now, we are not making eligible losses. We are running in the reasonably good only. So now we are running at 40% capacity. Slowly we will be increasing it to 60 to 80% capacity. And while doing this, if we make the losses, we will become eligible for the anti-dumping, and we will be definitely filing the anti-dumping.
Okay, and I have a follow-up question on BSC Unit 1. So you just inform us that we will be producing less of EDA and more of other products. So,
yeah.
So our other products, what I know, the piperazine, data and AEP, we have environment clearance of 4,000 tons for PIP, data is 3,150 and AEP is 1,000. Any update on that? Have we got
No, we have mix of other products like TEPA also we have applied. Those are also on place. So we will be getting TEPA, and in addition to that, the existing, as you rightly said, PIP, data and AEP will be increased.
Okay, so then can we expect 80-100% capacity utilization for the other products? PIP,
yeah,
AEP?
Definitely next year.
Okay, and I had one more question on N-butylamine. What is the current capacity utilization and going forward next year?
We are running currently 30 to 35% capacity. I'll tell you, whatever the country's consumption, we have covered almost to 90 to 95% of the country's imports we have stopped for that product. Because we being a single manufacturer, initially we struggled, but today the stage has come, hardly anything coming from the outside country for this product. Second thing, we are just send the samples outside country, and we are evaluating for the REACH registration also for the exports. Third thing, which I just disclosed, called NBPT, N-butyl thiophosphoric thiamide. This product is required N-butylamines. So that we are going to take up in the next financial year. So that time, this butylamine is going to be operational more than 80%.
Okay, that was helpful. And my last question was on PG. What is the current capacity utilization and going forward?
See, what is happening, the PG and the DMC both together will come in a plant. And DMC, you are aware that these battery chemicals, nobody has in full swing. They just asked, one tank we have given, and we have to run both the plants. And in addition to that, we have applied for the pharmaceutical grade, pharma grade propylene glycol. So far we are making only technical grade and food grade. The moment we get that permission, we will get the higher price for the PG, and thereby the lower price ability will come for the DMC for outside country, where we have paid them REACH registration also outside country, since China is dumping at below RM cost, because they must be doing the same formula, PG at higher price and the DMC at lower price. So we are waiting for the, actually we have focused on the DMC only, otherwise we would have got the PG pharma license earlier only, if we would have focused on the PG. We assuming that the battery chemicals will go fast, and that's the reason we were concentrating on doing the battery grade DMs and all. Now we understood that PG also that much important. We should do the pharmaceutical grade PG. So we have applied. We have done some investment and some modifications. Facility has been upgraded for the pharmaceutical grade and applied for the license. The moment we get the license, then this plant without battery also will survive more than 60-70% capacity.
Thank you. That's it from my side.
Yeah. Okay.
Thank you. Ladies and gentlemen, due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you very much. I thank you all the participants, all the investors, shareholders who have shown the interest and confidence on the management and the company. We will not let you down, and thank you once again. We will put all our efforts to make this company to highest level of the expectations. And thank you once again. Thank you very much. And one more, we welcome anybody who wants to visit the plants where the progress of the expansions can be seen with your eyes. So you can contact our CS who will be guiding you for the plant visits. Thank you once again. Thank you all.
Thank you. On behalf of Balaji Amines Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.